Welcome everyone to the latest in Business Gateway series of panel webinars that we've been running on various different topics. We're going to give folks a few moments just to register, because we have, very excitingly, 235 folk registered for today's event. So it's obviously proving popular, which is great. We'll see how many folk we actually get in on the day. I have a wee bit of housekeeping to cover first, which I will do while folks are getting registered and settled in. We will, and we are, recording this session because we will make it available on Business Gateway's YouTube channel later on. Everyone who is participating is on mute so that we can avoid any background noise. There is an opportunity to submit questions on the chat. I am not guaranteeing that we will get to all of them with so many of you registered. That might be a bit of a challenge. In a moment, I'll get the panel to introduce themselves. And if there's anything that comes up, links or anything that are shared, we will share those, and we'll make sure that that information gets out to folks so that everyone gets a chance to kind of get to see what's going on. So today, what are we covering? Well, if we look around the world, there's some fairly serious challenges going on in the global economy from a whole lot of different pressures. So it's very important that business owners kind of come up with the essential strategies and practical tips that can maybe strengthen their financial foundation and hopefully ensure long-term success. And for business owners and sole traders in the UK, one of the most important dates in the calendar is 6th of April, start of the financial year. And it's vital for businesses to have a solid financial plan in place for the coming year. So in this session, we're hoping to look at how every business across Scotland could be prepared for the challenges that are out there, and perhaps suggest ways to thrive in what is quite a challenging current climate. So we're going to look at things like financial health checks and tax and compliance and so on. And to help me with that today, I have a superb panel of experts on this subject, which I'm going to now give them the opportunity just to introduce themselves. So I'm come to Helen first. Tell us a wee bit about yourself and your organisation, Helen.
Hi, Hugh. Hi, everyone. My name is Helen Monaghan. I run a very small accountancy practice in Edinburgh, HM Finance Coaching and Advisory. Although we focus on accounts like every other accountant, I'm very passionate about financial resilience. And the way that I work with a lot of my clients is I blend psychology with accounts. Because, we'll obviously come on to this with some of the questions and things like that, but a sort of typical example would be like budgeting and cash flow forecasting and all that. And whilst we can put practical things in place, until we understand the behaviors that are driving them and the desires that are driving them, they can fall flat very, very easily. So that's the kind of sort of stuff that I talk a lot about with our clients and with some of the products and stuff that we offer.
Brilliant. Thanks, Helen. That's an interesting background there with the accountancy and the psychology. Colin, come to yourself. Tell us a bit about yourself.
Thanks, Hugh, and good afternoon, everyone. My name's Colin McNally. I'm an accountant now for 25, 26 years, set up our own business, which has just really recently been renamed as CGM Lumina 16 years ago. Really from the beginning, accountancy was our background. We did financial management, financial strategy. We've been working obviously with Business Gateway and many of the other kind of enterprise related agencies over the years. Do a lot of business planning, forecasting, financial management control, cost control, impact analysis, options appraisals, feasibility studies. So we really get into both the startup, innovative type business right through to kind of growth business. And as we sit in basically one of the Business Gateway services we support in East Wren. So yeah, that's me.
And obviously, one of the things, this is one of our series of panel webinars, but every single day across Scotland, we are delivering a range of webinars on various topics and subjects, and CGM and Colin and his team are one of the providers of that service, which is on the go all the time. Lucy, come to you. You're on mute, Lucy. That's you.
Can you hear me now? Thank you.
Yep, got you now.
Thank you very much, and good afternoon, everyone. And it's wonderful to be here. Unlike the others so far, I'm not a financial person, but I have to know finance very well. My name's Lucy Harrier. I am Managing Director at Prepress Projects, an employee-owned company that transitioned to employee ownership 2 years ago. I'm also a chartered director, having become a director of the company back in 2013. I took the decision to become a chartered director, and I did so in 2022. We're a 16-strong company based in Perth, Scotland. Most of our clients are overseas. We have very few Scottish clients, actually. So big things is like currency management, that sort of things. The type of clients we have are public sector organisations like the Publications Office of the EU, UNICEF, UN Women. So that's a really sort of abbreviated introduction to myself.
Brilliant. Thanks, Lucy. And Lucy and I met each other quite recently at a round table that the Small Business Commissioner Liz Barclay had organised, which was about Fair Payment Code, which was a very interesting session and something that's going to be incredibly important for small businesses, and we look forward to trying to do more with that. And Lucy is hiding her light slightly under a bushel there, insofar as Prepress is one of the gold standard Fair Payment Code companies. So well done to Lucy and her team. Okay, let's get on with the kind of content of what we want to try and cover today. We have a range of questions that we have kind of set that we want to try and work our way through. And we'll kind of take them one at a time as we go. As I've said earlier, if folks out there who are participating have any questions, please put them into the chat. As I said, can't guarantee we'll get to them because we've got a lot to cover, but let's see how far we get. So first question, which I'm going to put to Helen: what key financial metrics should small business owners focus on when reviewing last year's performance?
Well, first of all, I guess the usual ones we're probably mostly are familiar with is obviously your profit. How much did you make? Your sales. What were your sales? What were your costs? And what have you got left over? Hopefully that's at least enough to cover your business costs, and then your take home to kind of cover your personal costs. So that's your kind of what I'd call your sort of accountancy metrics. But I would also sort of ask you to kind of think about things like, well, what worked? What didn't work? What could I do better? What could I do less of? What could I do more of? All that sort of stuff as well. So whilst you kind of got to sort of think about the finances and the numbers, we've also got to be looking at, other stuff as well.
Okay, brilliant. Colin, any other thoughts on that?
Yeah, I mean, you do move in from the accountancy side. I think a lot of the time businesses don't look at ratios and analysis. So things like your gross profit, your net profit, your basic KPIs that a business can run very, very easily. I know we're going to mention software at some point in this conversation, but your software's there to deliver that these days. So, and that's a conversation we need to have about actually a lot of the tools that are there to make your life easy to understand the positioning of your business are now they're there for you. You don't have to think about them. So to me, it is, looking at the more detailed information of each line item, each project. Are they making money? Are you actually making true what I would call economic profit? So, back to things that Helen was saying, actually, are you including all your other costs? Is your pricing right? And it's really getting down to the detail of turning around and saying, do I know my numbers? And that's key for this. And those numbers then are reflective of what Helen also said about, your people and what went well and what didn't go well. So there's a range of things in there which even at the basic level can be put in place very quickly and very easily, and then used to take the business forward as well.
How much of a sense do you have of the things like those ratios that you're talking about? How much of a sense do you have of how well people understand those or make use of those?
Minimal. I'll be honest. There's the honest truth. I think the reality is that most people have kind of known about them. But I mean, this is a terrible situation to say. Hugh, we're sitting here on the 24th of April. Self-assessment period ended on the 5th. Saying something, I may as well get chucked off the call now. A lot of people who basically run businesses will not know their profit until they've went to their accountant, dumped their books in, and basically turned around and then told how much their tax is.
Mm.
And that's something we need to get away from, because basically that means they're not monitoring their numbers at all. So, it's not even do they understand it. They haven't even thought about it until, and the only measure they've got is, have I made profit and how much tax I owe? And they only find that out, August of this year. And that, even at the most fundamental level, they're not even looking at profit.
Yeah. Okay. No, that's helpful. Lucy, any thoughts on that?
Yeah, I think one thing I've learned is that businesses don't stand still. And when you're looking for key financial metrics, the metrics that you decide on for an individual company is different for each company. Like, we're a services company, it'll be different from like a charity or any other. So you have to, in looking at your metrics, you have to choose a metrics that are sensible for your business that you're in. You can look at all your ratios and whatever that you have, but unless they're realistic, well, SMARTs are very good. The SMART, specific, measurable, achievable, as long as they're relative to your business, that is the important part. But what I would say is that, as having just come through Brexit and a transition to employee ownership, your metrics have to be sort of tailored year on year, in that that they're reflective of the mode that your company is in. It could be the decision, it could be in a growth mode, it could be in a survival mode, I mean, just day-to-day survival, and it could be in a consolidation mode. So I think you have to look at the thing holistically and decide, what business am I in? What metrics are sensible for the types of business I'm in? And then I would keep going back, keep reflecting on what metrics you have, and do they meet what you're wanting to achieve? Because we talk about financial years, you should, like, our financial year starts in August, and we're already getting things set up for the next financial year, discussing what our targets are going to be, discussing what our KPIs are going to be, and what KPIs we want, because not all KPIs suit every company. So that's what I would say. It depends on the company, and keep in mind what sort of mode you're in. It could just be a pure survival mode.
Absolutely. Thanks, Lucy. And I suppose there's a couple of points in there for me. As you've kind of made the point there, very much so. The world is changing. The world keeps changing, and it's dynamic. So the business you're in needs to reflect that, needs to keep thinking, needs to use what's appropriate for what you are, where you are, and what's going on. So get that. And you've also made another very valid point, which I've realised. I made a sweeping statement earlier that it's the start of the financial year on the 6th of April for people. It might not be, because there are some businesses who have perhaps a different financial year. So my apologies to anyone out there who has a different financial year. Other financial years are available. Okay, so let's press on. Next question. How can businesses effectively set realistic financial goals for the upcoming year? We've talked about reviewing last year, but what about the upcoming year? Colin, what's your thoughts on that?
I'm going to pick up directly from Lucy, to be honest. One, start early. That's the first thing. This is back to my point a wee while ago. If you should be monitoring your accounts and on a regular basis, whatever KPIs you set, but they should be monitored. That immediately starts to give you a flavour of where you're going and how you're doing it. To me, it needs to be, one, depending on the size of your business, because I appreciate a number of people on this call will be single owner businesses. They could be multiple owner businesses, multiple staff. Key thing is, involve people around you. Don't think this is a one-off piece of work. Secondly, I'm a great believer of what I would call a white paper. Start again. So don't basically just take the historic, what did we do last year, add on 10%, and think that's a budget. No, that's just a piece of paper with numbers on it. So really turn around and look at your business. Sorry, Lucy, I'm picking up on all your stuff here.
No, it's okay.
But really, every single year you're going to change, you're going to grow. There'll be an aspect to your business that's changing and moving on. Things will be struggling in some bits. So one, you need, and I hate saying going back to the previous, you need the knowledge, not at the high level, of the detailed level of your business. You use that information to start to set the boundaries And from there, go speak to your salespeople, go speak to your finance person, go talk to the team, talk to the person on the ground, and start to get a reality of where you could be. You know, and if you're going to say do a marketing campaign, well, actually, what will that deliver for you and increase sales? So you're starting to look at individual changes in your plan changes over the coming years that will make an impact. The key thing is, and I'm going to say this one thing about business budgets, etc. You don't need to be 100% accurate. You can get away with 90%. You know, don't spend years and years trying to work out a budget, because you know fine, back to what Lucy's point is, the world's going to change in 6 months.
Okay.
So
No, thanks, Colin. The only sort of the feedback I give you on that one, you mentioned a number of roles there. The salesperson, the finance person. For a sole trader, that's the same person, so they've got to do all of that.
they need to do all of it, but they can then use their accountant, their family friend, bring in people around you. Don't you be just the only individuals involved in this. Get feedback. So that single person team can include a whole range of individuals who may or may not be able to, may not work for the business per se.
Yeah, absolutely. We've had a question. How you talked about that monitoring the numbers. How can we monitor the numbers easily and efficiently when we're the salesperson in this particular example? So how do we do it?
Is that to me again?
I'll come to you first, Colin. The others might have a few thoughts on that as well. But
well, that's what first. Yeah, I mean, I'm going to now. Sorry, I've mentioned tech already twice in the same, within 15 minutes. I think nowadays you need to use the tech that's available. There are many accounting related softwares that can provide a lot of that monitoring immediately to you. It's on the face of the dashboard as you immediately go onto that. If that's not something you've got, and I'm afraid again it'll be a conversation I'm sure about making tax digital very shortly, the choice may be limited as we move forward of whether you can use accounting software. But that there's the home of where it is at the moment, and it's developing all the time. But reality, stick to basics. If you had basically an Excel spreadsheet or a piece of paper, start to do some very, very high level matrix. Look at your sales, look at your gross profit, look at your net profit, look at your overheads. This doesn't have to be a massive, large amount of exercise. Some very, very basic metrics can allow you to see where your company's going. Do you mind if I chuck in a little tiny story? It will take 2 seconds. On a plane, met a person who ran 12 Volvo truck dealerships and repair centres across the UK. And I asked him, how do you control that? That's vast. How do you manage that as a person? He was an accountant, sadly. But he says 1 page. He says, I can see enough on 1 page of information to tell me how my business is running. And we near enough have to think about that. Get it all in one simple place. A few main metrics that work for you.
Excellent. Thanks, Colin. Helen, anything else you want to add to that one?
Not to the second question, but to go back to the original one about businesses effectively setting realistic financial goals. I would just sort of say, although I think Colin mentioned it earlier, is to price effectively for the resources that you have available. That is, I see that time and time again that the price just isn't right. Now, obviously, there's a lot of people putting their prices up, some legitimately, some not quite so legitimately, but in terms of think about your costs, so I mean, obviously I don't know how many people on this call apply to this, but obviously, and I'm sure we'll come to this at some point as well, so obviously your national insurance has gone up, and that's a biggie for some businesses. But we have to kind of to price effectively. You have to know your costs. It's a kind of given, but also build in contingency for unknown costs that haven't. And also what Lucy said. Things do and will change. So you can have the best plan, you can have the best price based on certain costs staying fixed, etc. But it will change before the year is out. So your price has to reflect that contingency. So a lot of people just kind of look at their costs. In fact, some people don't even price in any way effectively. They just kind of pull a figure out of the hat or look at what everyone else is charging and stuff like that. It's really, really important that you price. So taking the sort of the sole trader, maybe even the one-man band as we call it. you know, like how much time have you got available? What can you afford to, you know, how much time can you give your clients? How much time do you have to do for paperwork and admin? But obviously that's where technology can kind of help you with stuff like that. So, and then always building contingency, you know, always add a little bit extra for, you know, the unforeseen costs, or even just simply to build up a cash reserve, you know, that's crucial.
Brilliant. Thank you for that. Lucy, any other thoughts on this one?
Yeah, I think in setting financial goals, I'll come back to what I said earlier. It depends on the business. Depends if you're a service business or whatever. We're a service business, and how we set our financial goal, we're sort of ratio driven, and how we set our financial goals is dependent on the number of people we have in the business. So we just roughly, for example, we work. Our ratios are driven based on what we are paying people a salary with, plus then we add on a percentage. So it's all ratios. So at the moment we have like people's salary plus 50%. That's how we would be sort of setting financial goals for the next year for our teams. But what I would say to people is that a spreadsheet can be very sophisticated. We have a very sophisticated spreadsheet, but it's really quite basic. And we have our teams, each team has, we have a financial spreadsheet for each financial year. And each team has a sheet in that financial spreadsheet. We're quite lucky in that we're quite sophisticated in that we can link orders into the spreadsheet, so it updates everything. But I would start with a simple spreadsheet. Excel can be exceptionally sophisticated, and you can link spreadsheets, and you can link different teams to your targets. And then, like for example, I can go in at any time to our Excel spreadsheet and see how well any individual team's doing against their target for a given month, a given quarter, 6 months, and a year. And then I think it's just about setting up yourself a sort of reservoir of information about the company, its pricing, its clients, how much you're getting from clients on a monthly basis, and go from there. But in simplicity terms, start with an Excel spreadsheet.
Okay, brilliant. Thank you for that, Lucy. And while I've got you there, what common financial pitfalls should small businesses avoid when conducting a financial health check?
Well, what I would say is putting your head in the sand. I'm very a person that I like to things face on, and no matter how bad things can be, I wouldn't run away from doing any financial health checks. I mean, it can be very frightening for companies, especially when in the current conditions where things are changing every day, is just not run away. But what I would say is I'm quite an advocate for lifelong learning. And if you are a business owner, an MD, or any person that is managing the finances of the business, I would say that you have to know your stuff. Because if you don't know your stuff, you can't then ask your accountant the right questions. So I think the pitfalls that small businesses fall into is not knowing enough about finance themselves, the business owner. I would say it's a difficult thing to say, but take the time to learn about finances, and then ask your accountant, or ask anybody that's you might not have access to certain, like us, we don't have a finance department, but I wouldn't be frightened to go and ask people, you know, what about this, what about that, because people love to help. So I think the pitfalls would be, one, don't stick your head in the sand. Two is analysing the wrong things for the company. You know,
Okay.
it comes back to what your company is doing, what your company is and what you should be analysing, because you could get an answer to a question that means absolutely nothing to nobody. So yeah, just keep it real, you know,
Okay.
ask the right questions.
Okay. I saw you nodding there, Colin. Other thoughts on that?
Yeah, I mean, I would nearly say exactly what Sally's saying. Build a financial health check that works for your business. You know, actually have it as a checklist. You know, something that really, you know, don't just quite go into Google and try and find one. Something that really kind of gives you those indicators that shows where things are going. The other thing I would say, maybe we shouldn't be, or sometimes too optimistic in our thinking sometimes. So reality says is you need to be honest in this. If you're doing a financial health check, honestly look at your books, and that can sometimes, as Sally said, as Lucy said, really, really difficult to turn around and say, this customer is going to walk or this cost is going to go up. You need to be honest, because until you know the results of that, there's nothing you can do to put mitigation in place. And therefore, it really is about turning around and doing that as soon as possible. It's a bit like budgeting. And near enough, if you are that sole trader or you are that board, have it as part of your monthly review tasks, have it as part of your monthly meetings, whatever it may be, and just keep it continuously in that front line. And it just gives you, has to link to your strategy as well, obviously.
Mm-hmm.
Right. Thanks, Colin.
I'm
going to. Oh.
Sorry. No, I was just going to say, can I just quickly add in, and I think because I think it comes under this heading really, is like definitely agree with both Lucy and Colin, but I would also say don't compare yourself to others. Like I see a lot of businesses out there, a lot of service providers sort of asking like, how do you compare with others in your industry? Whilst that obviously has good intentions, it can get us sidetracked very, very easily and very, very quickly. I think it's important that we focus on our goal, your own goals and your own needs, nothing else, and do not get carried away with any new shiny new objects or anything like that. Just focus on what matters to you, what you need to have happen this year. Forget about everybody else. Yes, some people might have some good advice and some good recommendations, but don't look at your competitors or, I don't like using the word competitor. We're all trying to help our clients at the end of the day, but just don't copy others and don't think about, oh, they're doing this and they're doing that, maybe I should be doing that. Don't focus on your own goals, focus on your own needs.
Okay. Brilliant. Thanks for that, Helen. Before we came on the call, we were having a bit of a chat, the panel, and one of the things we began to look at was where AI played into all of this. We were talking about tech and automation. We've had a question, and it relates to this topic about financial health checks. So, Colin, unfortunately for you, I'm coming to you on this one.
Thanks.
Can you use ChatGPT to derive an accurate financial health check?
Technically, yes, but you need to make sure whatever you're feeding into ChatGPT relates to your business, or what you end up with as a generic check.
Yeah.
And you have to also watch that, ChatGPT is still very Americanized. Is it relating to really what happens in Scotland, or is it relating to a generic worldwide Americanized view? I'm not saying that's a good or bad thing, not getting into that debate today, but the reality is, what these tools can do for me is give you a basic structure to think about how to expand them. But for heaven's sake, do not use, this is a general comment, and obviously not the guidance of Business Gateway directly, that's a personal opinion, ChatGPT is good at providing you the basics, but for heaven's sake, do not take what it provides you without checking it and looking at it, because a bit like what Helen just said, it will send you off on a path that basically has no relation to what you're doing, and actually drive behaviour which actually is anti-growth or anti-survivability. So gang warily, as we would say.
Okay, think about it.
Sorry, if I can just add to that, because we do a lot of work for clients that are confidential, is that in putting your financial stuff into an AI engine, an AI large language model like ChatGPT or whatever, cloud or whatever, you're putting your information out there for it to learn and train, especially if you don't have the paid versions of these programs. So in putting any financial data out there, you're putting it into the sphere of anybody who else is using it. So I wouldn't put anything of a confidential, company confidential or client confidential nature into these AI, these large language models to get answers out of.
Okay.
That's
sound advice.
A word of warning.
A word of warning. Sound advice. Thank you for that, Lucy. Right, I'm going to move us on. Colin touched briefly there about changes in tax that are incoming. Helen, I'm going to come to you on this one. What are the most significant changes in tax laws and regulations that small business owners should be aware of this year?
The biggest one probably NI, which hopefully everybody on this call or anyone that needs to know already knows this. So obviously NI has gone up 1.2%. It's now 15%, and the threshold that you start. So for employees, and the thresholds come down. So basically, a lot of we're paying more employer NI now. I mean, I actually was just doing some payroll before I came on this call. We have one of our clients, for example, they have 9 employees. I would still say they're a small company. Okay, they're not massive, they're not tiny, but their NI has gone up by £1,200 in just 1 month. So we're looking at 12 grand over the course of the year. I was doing some work for a charity a couple of months ago. A lot of their employees were actually part-timers. But because of the threshold going down, their NI bill's gone up by another 80,000. So I mean, they had 100 odd staff, but a lot of them were all part-timers, all under the threshold before. They're now in the threshold. So yeah, if you don't know about that one, then I'd like to think you obviously do. If you need to know about it, I'm sure you probably know about it, hopefully. The other two are really not quite necessarily, well, right now, obviously Companies House, if you've got a company, the kind of Companies House have been doing a lot of changes over the last couple of years. They're still implementing some more. Directors have to be identified and all that sort of stuff. They're really cracking down on AML and all sorts of stuff, which, quite rightly so. And then the other biggie, which will apply, I would imagine, to everyone on this call, or certainly a large majority of them, is Making Tax Digital kicking in April next year. So what that means is you will have to file your tax return quarterly, and then there'll still be an annual thing at the end of that. But basically, you have to file your tax return every 3 months, or a version of it, and that's going to be quite hard for some people, I think. And I think it's actually a good thing, because what Colin was saying earlier is it'll help you monitor it'll help you monitor everything far easier and far quicker and stuff like that. But yeah, what I would say is, as a result of that, so what you have to do is you have to have software to be able to do that. So I would recommend anybody that might fall into this Making Tax Digital, which I think the thresholds, is it 30 grand? I think if your taxable income's 30 grand, you have to register in April next year, and then it comes down again for the following year. So get yourself some accountancy software this year and just practice with it. And then when you do have to start doing it, you're not like totally in the dark with it, kind of thing.
Okay, no, that's really helpful, Helen. Kind of expanding that on a wee bit, Colin, how can businesses ensure they remain compliant with those new tax regulations?
Unfortunately, and sorry, I know this sounds like a broken record, Hugh, the reality is now we're soon going to move on to all of us being in some form of software.
Right.
That software has built-in compliance. And therefore, that's the first step. That's your first initial guard to basically making sure you're compliant. So that software, assuming it's set up correctly and everything, will basically tell you that you are now paying the 15%, or that basically you've got pensions to deal with, or you're having to make sure that you're there's a whole range of regulation around employees and pension, etc. So there's that piece. Secondly, and this is going to sound really strange, but diarise things. Make sure you're actually knowing that your VAT quarter is the end of May, and basically you must have it in by the 7th of July. The same will happen, and Helen, you can maybe double check this on me. I think you're going to have something very similar to the VAT to basically submit your quarterly self-assessment.
Yeah.
So literally you're going to have that month between the end of the quarter and basically the time you need to submit it, and that becomes really important. Especially that kind of first quarter, etc., where many sole traders, they're not used to, they literally will hand 12 months into somebody like Helen or our services, etc. And that's near enough a culture shift. And lastly, if you are large enough to have an accountant or a bookkeeper, make sure you're speaking to them, make sure you're having that information chat and that they're keeping you up to date. I do want to remind people that it is the business owner's responsibility to deliver these on time, not the accountants. It's still your responsibility, even though you go and hire an accountant to do it.
So So it's your responsibility as a business owner, even if you've got the accountant doing it. So in terms of that software, if your accountant's got the digital software, you don't need it. They're doing it.
Normally what would happen is, Hugh, there'd be a conversation between you and the client, which would turn around and say, what part are they doing and what part is the accountant or bookkeeper
Right.
doing? So,
Okay.
they may wish to do all their invoicing, they may wish to do all
Mhm.
their purchase side, they may wish to pay their employees, but then they may actually say, don't really want to get involved in payroll, so let Helen do that piece and my self-assessment or year-end accounts. So my advice would be is that if you pick most of the softwares, it's a single license near enough. So
Mhm.
basically, and then multi-user. So you and your accountant have the same live view at all times.
Right.
So the key thing is, and again, once this software goes into play, it's not just a case of leave it to the accountant. You should be using that as your tool
Yep.
to actually answer some of the questions we've had in the last 20 minutes.
Yep. No, that's helpful. And just to clarify as well, I mean, if you're a sole trader, Helen, you touched there on sort of thresholds. So if you've got an income as a sole trader as a business above a certain level, then that tax regulation is going to impact on you as well, then, isn't it?
Correct, yeah.
Yeah.
So I think it's all landlords, I think, at the moment, or and then yeah, for sole traders, I think it's over 30,000.
Right.
They had the HMRC had the threshold lower, and then they listened to the feedback and they pushed it up a bit. But they have said quite blatantly that they want everybody on this system at some point, so it might not be next year for some people, but it will be within 2-3 years, maybe at most.
Okay. And sorry, that's a threshold. That 30,000 is a threshold on what?
On the turnover. I think
Turnover.
it's either I'll check and then I'll give it to
Great.
check send over. I think it's
Great.
either it's whatever it is, it's on the sales, not your profit. So even
Yeah.
although, say for example, you only have £10,000 profit, for example, which is under the taxable threshold, you will still have to do the software because your sales or say your sales are over 30,000 or whatever.
Gotcha.
Yeah.
Gotcha. No, that's helpful. That's helpful. Okay. Let's move along a wee bit. And I'm going to come to Lucy. You've kind of touched on what you do as a business, Lucy, but can you maybe expand a wee bit on what you feel are some effective budgeting techniques for small businesses to ensure financial stability?
To ensure financial stability, that's
a tall order. I appreciate that.
Yes, it is a tall order. And just before we go on, can I just mention the employer's allowance has also gone up to 10,500. So for small businesses, that's really important because it's gone up from 5,000 to 10,500. So if you're using these softwares, there's usually a tick box to say apply employment allowance. So just to remind people to, when they're doing the next P-run or whatever, to tick the box on the software or to apply for employment allowance because it's really important. That's given me time to think about my
effective budgeting techniques. You can't dodge it. Come on.
Exactly. Yeah, it's about set it, like we're a service-based company and we set certain, we're not like, we have certain things that we budget for example, like how much petty cash we would use in a month. But in terms of budgeting, I mean, we do not have a lot of costs as a business. So in terms of a service business, our costs are very low and we would be looking at our costs regularly. One of our biggest costs that we hadn't really budgeted for was the increase in, well, we had a budget, but we were surprised when we run the profit and loss how much costs we were spending on, like, for example, bank charges and things like that. These things, you have to keep an eye on your costs, like we have software, so we run profit and losses quite often to see what is going on in the business. I have a total handle on, through software, on what costs we are incurring. But I can come back to the bank costs, but I'm probably not the best person to ask because it doesn't we don't have a lot of costs that we have to budget for in terms of the type of company we are. So there's probably, I think the accountants would probably be better placed to answer that question.
Okay, well, you put them on the spot now, so I'm
Yeah.
going to go to Colin first on that one.
Thanks, Hugh. Probably two things. When you're budgeting, and especially as a startup or a growth business, or I hate saying when you're in that kind of shaky period of time, which all businesses go through, look at both budgeting as in profitability, but also as cash. Because obviously, budget where your cash, so basically cash flow forecasting near enough as well. Because at the end of the day, it's not, you may budget and say your profitability, your sales are going to be £10,000 this month. Your sales technically will be 10,000. You've invoiced for 10,000, but the big burning question is, when does that individual pay you?
Mhm.
You know, if they don't pay you next month, you're £10,000 shy. You've had all the costs coming in. You've had all the purchases coming in. The other thing I would also build in, and this is probably, I hate saying we're back to COVID times, uncertainty. Somehow you need to build in the reality of uncertainty. You know, I mean, I woke up this morning, listened to the news, thinking I would not like to be the FD of Boeing today when they've sent back a plane. Now, I'm not going into any China, Russian, American politics here, but, you know, things at the smaller level basically turn around and happen in businesses. Things change and alter. So make sure whatever your budget is, it's agile enough. You know, the other thing is, you know, start looking, and it's something Lucy did really pick up on. It's all these small costs. The older your business is, the more historic you just accept. You just, that's the bank I've always used. That's the insurance company I've always used. That's the you know, et cetera, et cetera. And without trying to sound like a Go Compare advert, you need to go and challenge these. You know, you need to go and turn around and really run the market, see what's out there, challenge what can be done. Technology has taken over a lot of things. So a lot of things are cheaper now. Phone systems, IT, you know, that kind of web hosting. You know, so there's things you could challenge in your business which don't affect the potential performance of the operational. So that's, and the other thing about budgeting, and we talk a lot in budget when we're looking at budgets about cost cutting. Actually, it's about the opposite. It's about spend. You know, to me, through any tough time, spend more in marketing, more in people, more in some form of technology, system, equipment. You know, where do you invest the money at that kind of time? And your budget should include that, not just my sales are down, so therefore I must cut costs. Actually, maybe it's time you invest in something, and maybe something else needs to happen. So yeah, that's some general tips.
You've touched again on something I mentioned earlier, and that's about, you know, getting paid. And as I said earlier on, Lucy and I roundtable recently, Small Business Commissioner, organised because they have introduced this fair payment code, because there's a recognition that businesses maybe struggle to get paid on time. One of the challenges that Liz Barclay, the Business Commissioner, put to us that day was that in many instances, businesses don't have a contract. They don't have a bit of paper that allows them to then challenge if a customer doesn't pay them on time, because they just don't have a bit of paper in place that says, you said you would pay me in 30 days. So there's some real issues in there that, as I say, Small Business Commissioner is looking at and trying to resolve. So there's a lot going on in that space. Helen, any further thoughts on this one?
Yeah, quite a few actually. Just actually to pick up on what you just said there, and that was a good point, Colin, about the cash. With regards to, albeit, you know, it doesn't really help in the short term, but you've got the Late Payments Act, which means if somebody has paid you late, you can apply a fixed fee and a percentage of the interest. A percentage on the overall total. It doesn't always work, but it kind of sometimes puts a bit of pressure onto people, and then it does make them pay quicker. You know, if they have cash flow issues, obviously it doesn't really do anything, but it can put a bit of pressure on it. Going back to the question in terms of, absolutely look at cost, but don't always focus on cost cutting like Colin said. think about your return on investment, which I think Colin mentioned earlier as well. You know, it's really important that you think about, what am I getting for this cost? Because, you know, a lot of people do this automatic knee-jerk reaction like, oh my God, you know, I need to start cutting costs, and they cut all sorts of stuff and then realize actually that was stuff that was helping them, like the marketing budget, like, you know, all sorts of stuff. So it's really important that you don't just do a knee-jerk reaction on cost cutting. You think, what am I getting for this? Could I invest more in it, or what, or rather just what would be the impact if I cut this completely, kind of thing. On the flip side, though, it's really important, you know, we talk about budgeting and we talk about costs, but we forget to talk about sales. You know, so it's like, what are you doing to get more sales? You know, are you helping? Are you focused on helping your client, or are you you know, so it's and really get inside the sort of the head of your client, or the heart of your client even, and go, what is it they really need? Could I provide that for them? And if you can help your client, you'll fare far better in any financial storm, as I call it. You know, if you're there for your client, if you're supportive of your client, they will still keep buying from you, kind of thing. And another two things to sort of suggest, which is one thing I mentioned at the beginning. So again with the kind of theme of cost cutting, is be frugal, but don't be restrictive. So even on the sense of, we kind of look at, you know, like looking at your return of investment, but even thinking about your own personal expenditure, because let's face it, you know, we all run a business, but we all need money for our personal needs. So it's like thinking, okay, yes, I need to cut this, or I need to reduce that, but if it's something that gives you, you know, if it gives you something that's of immense benefit, then don't cut it. Don't cut it completely. Maybe reduce it, but don't cut it completely. You know, if, you know, for example, I don't know, let's say you have a nanny or a cleaner or somebody like that, and it just frees you up to do your business or to work on your business, where somebody else is kind of maybe helping you out with some household chores and stuff like that, then whilst that might be a luxurious expense for some people, it allows you to then work on your business, and you can probably make that money over, you know, twice over, 3 times over, maybe, perhaps, who knows. But, you know, so it's really important to kind of think about stuff like that. And then what I mentioned earlier at the beginning was really think about your financial behavior. You know, we've talked about, you know, don't put your head in the sand and stuff like that, but, you know, what I kind of mean by is, we really need to sort of think about our spending habits, the kind of our attitudes and stuff like that towards even sales, the work that we do. You know, I know a lot of people, for example, that they want more money. I mean, let's face it, we all want more money, but very few people are prepared to do anything about it. You know, but I don't necessarily mean, you know, work to a point of exhaustion or anything like that. Far from it, but you know, we do have to roll up our sleeves and do some action. And there's a lot of people that don't. They kind of sort of just want easy money and stuff like that, but there's no such thing as that. It's just, you know, we have to put a bit of work in, and we have to kind of think about, you know, are we buying emotionally? You know, are we, you know, so like, again, thinking about and when you think about the return on investment, like, what am I getting for this? And that can be quite insightful from a financial behaviors as well, because it's like, well, what does this give me? And, you know, am I spending more of this when I'm feeling grumpy or upset or what have you? Or, you know, is this actually giving anything to my business, or is it actually giving something more to me personally? You know, and then really getting into that kind of thing. Yeah. Okay,
grand. Thanks, Helen. Just touching, Colin, you kind of touched on this as well, and it was about costs and what you're spending on stuff, and you kind of very briefly touched on the cost of some things is coming down, or it's more competitive, or try negotiating. Yeah. And we, Business Gateway, held a wee kind of staff conference recently, got everyone together. We had a brilliant business panel who shared their insights on the support they'd had from Business Gateway, or the issues or concerns that they had. And one of those, Gemma from Gut Wealth, made the point that she was really pushing on negotiating prices and costs and all the rest of it with people. And it's not so much chancing her arm. She was basically taking control of her business and making a point of trying to get costs down and so on, and being quite successful about it, because she was actually applying herself to that. So something for folk to obviously think about. Don't just take the price you're quoted, try negotiating. But the other thing, you again, Helen, you touched on this, selling. anecdotally, and this is something I've heard before, anecdotally in Scotland, we're not very good at selling.
Yeah.
You know, so there is something for me in there about trying to improve our ability commercially across the piece of being able to sell.
Yeah, I mean, I think a lot of us, I mean, a lot of us probably get leads and we just don't follow them up. We think, oh, maybe they just, the sort of typical thing is like, oh, they were just saying that to be nice, or all that sort of stuff, or alternatively as well, going back to the behavior, or going back to what we were saying earlier as well, was that, some people think, oh, I want more money, but I don't want to work for it.
Yeah.
So that's why we don't go out and get more sales, because it's like, oh, I have to work for that. So, I honestly, like, if you truly, if you try, I mean, this is a bit of a cliche, if you love what you do, but if you truly love what you do, you love helping your clients, they'll, they might have to cut their own costs. If you're a service provider, then obviously, they might have to reduce their costs with you. But if they love what you do, they'll find a way to still have like your minimum service or something like that, and if you're helping them, just always keep your customer in mind. Always think, what am I doing? What could I do to help them? Can I help them? What could I do? Is it more of just a case of, okay, I can't help them, but I know somebody else who can? It's not about being selfish as well. Think, if you truly always start your working day with, how can I help my clients? How can I help my customers? How can I make their life better? And that's what sells every single time.
Yeah. No,
and
really
it makes you feel good as well.
Yeah. While I've still got you, let's move along a wee bit, because I'm very conscious of time. We've got about 9 minutes left. How can businesses manage cash flow more efficiently, especially during economic downturns? And I'm coming to Helen on that one.
I think, to be honest, probably just summing up everything that we've said, all of us have said: review expenditure, review our pricing, review return on investment, review our costs, all that sort of stuff. Keep an eye on your numbers. Honestly, I don't think there's anything new to add here. I don't know about anybody else, but I think we've just a summary of everything that we've said up until now.
Okay. What tools or practices can help small businesses forecast their cash flow accurately? I'll come to Colin on that one.
Yeah, I mean, Hugh, it's probably been one of the areas which I would say has advanced more within the accounting software piece in the last 2-3 years than maybe many other aspects. I mean, don't get me wrong, I can go back not that long ago when Excel was the thing. It was basically what you used. That was the core thing of forecasting. The reality now, and I won't name any names as such, but there are several focused tools out there which connect into the main, either owned by or connect into the main accountancy software providers. When many of the softwares we're now getting in accountancy, you're getting 7, 14, 3-month days, 3-month forecasts to allow you to look at your numbers. Is it 100% accurate? No. It's using, sorry Hugh to mention these 2 letters, AI, to basically pull the data that you've got. You can then make changes to it to add in, oh, I'm getting a new member of staff, or actually my sales are going up that month, or I expect Jimmy to pay me a month early, whatever it may be. But the reality of the push now is not on the 3 months, it's on the 12-month type software, where you're really using, and it usually does cost, by the way, this type of software. It gives you that ability to report. It gives you the ability to forecast out. It allows you much more depth, and maybe even project level of changing and analysing in much more depth. So yeah, there are some really, really good tools out there, which I hate saying take the effort out a lot of the cash flowing. But again, it's a bit like our conversation with ChatGPT. That's only an AI tool version of your cash flow. You cannot take it for granted. You need to then go and do the effort to look at it and analyse and make sure it's right. And think about it again from some of the things Lucy was saying about the strategy of your business, where your business is at. Because all the tools are doing is just basically taking last year's and adding their algorithms onto it. It's not taking your knowledge and adding onto it.
So how can it help? How can, and I guess AI is the kind of key plank of automation, or maybe there are simpler ways of automating. How does that automation help small businesses save time, reduce costs? How does it do that?
They reckon, I mean, I'm sure you could get numerous other quotes in the number of hours here, even basically implementing something like Xero, QuickBooks, Sage, they reckon even the smallest business is going to save 3 or 4 hours in admin. You know, removing the basics of bank reconciliation, removing the basics of finding issues, the fact you can scan your receipts. I mean, I want to take me back 10 years into our accountancy practice and basically trying to find the receipt from, 3 years previous. Well, now it's on there. I scan it in once, it's on the system. The ability to, for both sides, you no longer have to go to your accountancy office or vice versa, because actually on a screen like this, you can both share whatever is happening in your business real time. The ability to pull bank numbers in. So it helps you in that efficiency, but it also helps you in your visual interpretation back to our metrics. Immediately you look in your dashboard of any of these tools, you've got how much is in your bank, how much are you going to have left in your bank after certain things? Who owes you? Who do you owe? So immediately that's in your face the minute you open these up. And I hate saying most of us in business are nosy. We want to see things. So that's there. So we're going to go and look at them a little bit. So immediately that is where the efficiency comes in. You're maybe looking at various aspects, stick on an analysis tool, stick on a cash flow. You've got a full reporting system there that can start to flag. And that's the key. It's not give you, it will not tell you on the 5th of June you're going to run out of money. It will start to flag that it's maybe heading that way and you need to do something about it.
Yeah. Okay. Lucy, just any kind of thoughts you have in terms of what you do as a business to improve your operational efficiency? Is there any particular things that you're doing to improve operational efficiency?
Yeah, I think one of the big things we've done to improve operational efficiency is to use a cloud-based system that everybody can see, total transparency. I think it's really important for business owners not to sort of, I'm not an accountant, but I wouldn't put the responsibility, the Companies Act of 2006 has certain responsibilities for directors. We have to be responsible in our operations. So for me, that is making sure that there's transparency so everybody can see what the finances are, what is happening, so that we're all responsible for ensuring, one, invoices go out on time in the month. We don't wait until the end of the month to invoice. We get the approval from the client, then invoice. And the other thing is, in terms of operational efficiency, when it's screened that our invoices are 1 day or are coming up to being overdue, even 1 day, we will be back at the client saying, sorry, you're 1 day overdue. I think in Scotland or in Britain, we can be quite not embarrassed about speaking about money, about asking for money. If you've done a service or if you've done anything for somebody that you've invoiced for, they are due to pay you. And we shouldn't be embarrassed about asking for money on the day that it is due. At the same time, that's why operational efficiency is invoicing on time, chasing for overpaid, overdue invoices, that sort of thing. It makes cash flow so much easier in the long term. And also in terms of operational efficiency, it's not really operational efficiency, but it's operational longevity, is having a business reserve. I think that's really important that you talked about bad days and operational efficiency, and when it's good, we should plan for the worst. So when the worst happens, we're ready for it. There's certain things we can't plan for, COVID, although we did have one client that asked us back in 2008 for a flu pandemic contingency plan. There is things that you can't plan for. So, but, it's just, business reserves important for operational efficiency, and you should plan in the good days for the bad days. But transparency and using all the systems that are out there to help you get your day-to-day jobs done is, it'll depend on the business, but use them. The only problem is if you're an individual or a sole trader, they do cost. And that's the thing, they do cost. And there is a cost to business, and we have to appreciate that.
Okay, good advice. I'm very, very conscious of time. Very briefly, any last minute thoughts and advice you would give to folks out there on this subject, Helen?
Yeah, again, probably going back to sales, but thinking about revenue streams, what options have you got available? It's really kind of being, as I say, thinking about what your customer, really get inside the head and the heart of your customer. What do they need? What would make their life easier? And be original. Don't just, again, come back to something else I said, don't copy. Don't look at what everyone else is doing. Don't look at what, just think, okay, these are my customers. What do they need? What do I think they need? What have they told me? Listen to that feedback, or even just listen to the passing remarks that they might make. Be original. But yeah, don't be afraid to be different. Just to take a very, very quick example, so my partner, we've got an old Volkswagen camper van, and he was looking for some parts, and there's two major Volkswagen parts companies. Anyway, one of them sells they both sort of sell similar stuff, but equally one of them sells the parts individually, and the other one sells a kind of package deal kind of thing, right? And he was like toying between which one to go with, and basically the one that sells the package goods, the package parts, had an offer on over the bank holiday, for example, and he was keen to buy something from them to get a discount, so on and so forth. But actually they didn't give him what he needed. So even although they were the ones that had the discount on, he went to the other company because the other company gave him exactly what he needed to give him the individual parts. And that's why it's important to be different, because your I must say, I like to use more competitor, but your other companies could be offering discounts left, right, and center, but they might still not be giving your customer what you need. So if you can give your customer what you need, do it.
Brilliant. Colin, even shorter than that. Last one at once.
Client first, create a financial culture.
Brilliant. There you go. Rounding that off beautifully. Folks, thank you so much to the panel for all your input and your answers there. That was brilliant. Really enjoyed that session. To everyone out there who's participated, thank you so much for your questions. We've tried to get to some of those as best we can. I hope you've enjoyed it, and I hope you'll join us again for the next panel webinar when we come back to you with the next exciting topic that we want to touch on and cover. But thank you today for joining us. All the best, and take care out there. Thanks, folks.